Hello, everyone. Welcome to Real Vision Live. For Real Vision, I'm Max Wiethe. I'm joined today by Warren Irwin, the president and CIO of Rosseau Asset Management. Warren is one of the most well-respected natural resources investors, and unlike many people in the space, he is known for not being a cheerleader. You get so much of that in the industry, and it's really refreshing to talk to Warren and get to hear somebody who's willing to put out a bearish view on some of the metals that have made him a lot of money over the years. So I'm very excited today. Warren, thank you so much.
Oh, it's great to hear it, Max.
All right, so we build this as the revenge of the miners, where natural resources meet green energy. We're going to talk about some other things, but I think that's a great place for us to start. There's really two avenues that I want to go down today. One is batteries and the electrification of really the whole economy, global economy, and then as well, uranium in particular as a source of it's not a renewable, but it's not a fossil fuel. So why don't we start with uranium? We saw a big pop at the beginning of the week in some uranium equities. Was that just is there any news to be tied to that pop?
No, I think everybody in the uranium business is a little confounded as to why the stocks are popping when the spot uranium price is still around 30, and because it's been reasonably stable here. Uranium amongst us miners has a very unique place in everybody's heart, especially anybody who's been through a uranium bull market, because uranium bull markets are possibly the most fun bull markets to participate in. The fortunes that are made in a uranium bull market can be incredible. And that's why guys like me are reasonably excited about finally the world figuring out that we can't power this new electric world we want with fairy dust. And frankly, solar power and wind is not going to power this earth. We don't have the storage technology today. I'm here in Canada. In the wintertime, it gets dark at 4 o'clock in the afternoon. It's overcast where I live here, probably 2/3 of the time all winter. So we can't rely on solar, and the wind's not blowing. So how do I just freeze up here in Canada? We need some real alternatives for power globally, and without a doubt, nuclear power has to be in the mix.
So you talked about the previous bull run and how much money was made in that time. I think it's worth talking about how long you've been interested in uranium. I know at one point in time you said you were the largest shareholder in Next Gen Energy. So how long have you been following this uranium trend and playing it in and out?
Probably 10 to 12 years. I was involved in the last uranium cycle, and it's a while ago, probably 10 years or so ago, a little bit more. And so I was involved then. I was involved in a handful back then, and it was interesting. Then we basically went from about a handful of uranium companies to several hundred during that bull market. And as I caution people in playing this next uranium bull market, is be very, very careful. This is not a Warren Buffett buy value type of play. This will be a massive, it'll be a massive run in these stocks, and there will be anybody with a pulse will create a uranium company, and you don't want to own those uranium companies on the downside of a uranium cycle, because of the 400 to 600 uranium companies last cycle, it got whittled.
Sorry for interrupting your video, but I have an important message to share. At Real Vision, we pride ourselves on providing the very best in-depth expert analysis available to help you understand the complex world of finance, business, and the global economy. So if you like what you see on Real Vision's YouTube channel, that is just the tip of an iceberg. You should come over to realvision.com and see how we are not leaving any stone unturned, from publishing more in-depth videos, live discussions, written reports, and our latest feature, The Exchange, where you get a chance to engage with experts and fellow subscribers and learn from everyone's experience. It is an experience which you live and you learn from. So if you go to the link in the description or go to realvision.com, it costs you just $1. I don't think you can afford to be without it.
You don't want to own those uranium companies on the downside of a uranium cycle, because of the 400 to 600 uranium companies last cycle, it got whittled down to probably less than 20. So you had hundreds and hundreds of companies going out of business or being rebranded, whether it be technology companies, gold companies, or whatever the flavor of the day people wanted to get into after the uranium bull market ended the last time.
So where are we now? How many companies are there out there, and how many of them do you think are legit? And then what are the types of things that you're looking out for to push us forward into, the real throes of the bull market?
Yeah, it's a very good question, Max. The good thing about the start of the bull market is we've had such a lousy uranium market for the last, basically post-Fukushima. So since the Fukushima accident until today, the market has been pretty bad for uranium. So what's happened is it has really done all the investors' work for them by weeding out many of the really bad ones, the outright scams. So what we're stuck with today is we have extraordinary development projects like NextGen, which is without a doubt one of the most economic mines of any commodity in the entire world, and it's in the process of being built over the next number of years. But also you've got a number of what I consider marginal projects, which are either have mining constraints or have costs of production that might be $50, $60, $70 per pound. And spot uranium right now is 30. So those guys are sort of on the cusp. And so they will be the next tier, but in order for you to make money in those names, you really do need a run in uranium so people know for a fact that they will indeed be economic. Because right now, a lot of them are not economic. The only significant one that I'm aware of that I would really, is definitely economic is NextGen. And the remainder of them, they all have their challenges and they're not super great. And that's why there aren't many, if any, other than NextGen uranium mines under construction, because we do need higher prices before we start seeing some construction of some uranium mines. But so if one's playing the market, to a certain extent, when you get in early, there's a little bit less risk because the companies that are involved are real, that are in existence today. They are run by quality people. The risk happens later in the cycle once all the Johnny-come-latelys join the party, and goes from being less than 20, let's say, good uranium companies to being hundreds of companies, because there aren't 200 really good uranium projects in the world. That is for sure.
Okay, so what is going to move that spot market up? What is going to move the price of uranium up? We have huge, disruptions in supply, at least at the moment. A lot of people are citing that as what is going to potentially start to move this upwards, as companies like Cameco, they've got contracts they've got to fill, and they're not producing nearly as much. So they're going to have to step into the spot market and buy uranium. Is this the catalyst that people have been waiting for?
Yeah, well, I have been a little premature in calling a bull market, and the only person worse than me is the CEO of Cameco, right? These guys have 1,000 times more information on the uranium market than I do. I called it early, but they called it really, really early. And so the uranium market is indeed, it's a tough one to call. And the part of the reason is there's about, 190 million pounds a year of consumption of uranium, and production in a typical year would be 140 million. So you've got this, you've got that delta there picked up by secondary supply. So secondary supply is a bit of a wild card. So that makes it kind of wacky to try and predict it. Okay. But what's happened in the last year or so is actually Cameco, which is the second largest producer in the world, they have shut down all production. Like, they are producing not a little bit of uranium, they're producing zero right now, like not zero, zip, nothing. They have long-term contracts to provide uranium to reactors, and so you're exactly right. They have to go into the spot market to buy it. So that's a bit of an interesting one. And Kazatomprom, the world's largest uranium producer out of Kazakhstan, they are having issues with COVID, which is really hurting their production. And they're also using an interesting production technique in situ recovery using pumping acids into the ground and pumping back the pregnant solution, which would dissolve the uranium back up and stripping it out and recycling. So it's interesting to see that what will happen over the next number of years as to how reducing that type of production, how they could ramp it up again. Because some people are concerned the damage to the uranium reservoirs that could occur with this fluctuation in production. So we'll see what happens there. So on the production side, things do not look super great. And on the demand side, we've got a couple of unique things happening. Usually utilities like to be conservative, so they'll enter into long-term contracts with companies like Cameco to ensure that they have uranium supply out, the next several years, so they're not beholden to the market and to the spot price. So not only do they lock in the price, but also lock in the supply from a reliable supplier. And they've been playing it kind of cute in that they've been just playing the spot market, because there's been some secondary players putting out some uranium into the spot market, and Kazatomprom has been selling into the spot market too. So the dynamic is a little makes the utilities right now a tiny bit vulnerable, and especially when you've also got Cameco, like you'd mentioned, has to go into the market to buy spot uranium to even fill their long-term contracts. So it's quite a vulnerable situation. And then also on the demand side, you've got the Japanese figuring out that they've got to restart the reactors, or they're not going to meet any of their climate goals. You've got the Chinese are building reactors, and I think right now the rough number is around 50 nuclear reactors are being built around the world. There's a base of around just over 400, around 440 reactors in existence today. And the U.S. has announced that they wish to extend the life of some of their reactors, which is a good thing. So you've got the U.S. has figured out that we need some, we all need good, solid baseload non-CO2 generating electricity. And despite all the hyperbole from environmentalists over the last half century since the 3 Mile Island incident, nuclear energy remains the safest form of energy generation in the world today. And I'm especially excited about new technologies like you may have heard the new modular reactors, and their fuel is already liquefied, so they're pretty much fail-safe because you can't have a meltdown because your fuel's already melted down. So there's some really interesting new technology that are finally making it to the market despite years and years of lobbying against it by groups like Greenpeace and other misguided environmentalists who have, as a result, damaged the world's climate way more than they've helped in the last 50 years. Can you imagine if the boom of nuclear build-out from the 70s had continued, and in the last half century we actually spent some money on R&D in the nuclear space? We'd be in a way better position today, but instead the last 50 years, Greenpeace has fought nuclear energy, and all the other greenies have, and we've just burned coal on the other side of that to generate power. So it's been an environmental travesty, and the protests funded by these environmental groups, which have been backed by a lot of players who don't want nuclear, namely the coal industry and other bad players like that. So it's been really a travesty the last half century that nuclear energy has not continued to develop. And I think right now we're starting to see it. We're back on track. The Chinese are back into nuclear. They're building reactors like crazy. They see it, and I think we're at the beginning of a nuclear renaissance here. And
okay.
Look forward to it.
So with that being said, I wanted to switch into opportunities. You talked about Cameco, Kazatomprom, the two largest producers in the world. There are other options to play it, like you have the Yellow Cake in the UK, which is, I think, just like a holding vehicle where they're buying in the spot market and selling it. And then we have Brigitte asked a question about uranium royalty companies like Uranium Royalty Co. So when you are looking at the different options that are out there for investors, how do you make sense of the different ways that you can play this?
Well, the good thing is for uranium investors, you can play it a host of different ways. The uranium royalty companies, I'll touch on that first. They're sort of reasonably new And there are, the royalties they have. They're gradually picking up royalties, so they're pretty new. They're not as established as the royalty companies, let's say in the gold business, like Franco-Nevada, for instance. That's really pretty niche here at the present time. Also, to play it from the big cap point of view, the bigger investors may want to look at Kazatomprom and Cameco. I don't know how a big investor, like from a big firm like a BlackRock, would feel about buying Cameco, the world's second largest producer, but that is actually not producing anything. So that's a very interesting one, because and that shows how interesting the uranium market is. Can you imagine if you talk to any other commodity business, let's say, and somebody said to you, Max, oh, the second largest copper producer in the world has shut down all their mines. Like, that does not happen, and that is happening now in a market that has already got tremendous fundamentals. So it'll be interesting. So the blue chip guys want to play Kazatomprom, Cameco. I wouldn't recommend the royalties unless people really have want to play. It's pretty niche right now. Then amongst the developers building a new mine, the ultimate one to play is NextGen. I'm a huge bull on that, huge fan of it. The economics are tremendous, but then there's a number of players that are the next tier down, which are don't have the economics of the NextGen, but will be players in the next uranium market, and some of them have a few warts. There's a few I'm not super big fans of, but there's a next tier, and that you want to play, and that'll be like a Denison or a Global Uranium, GoVX, Fission Uranium, and they all have their issues. Some of them are in bad jurisdictions. Some of them have really tricky mining conditions. Some of them are using new technologies to mine. So they all have their different risks, and that would be on the little higher risk category. And then once the bull market starts, trust me, there will be another 50 to 100 new baloney uranium companies that'll be super high risk. If you want to buy it 5 cents and watch it go to 50 cents, those will be the ones to have some fun with. But they're just like they're for trading, not for owning. If you know what I'm saying. Yeah.
Yep, I gotcha. Well, Chris asked, what are your thoughts about junior miners like Encore Energy?
I'm sorry, I've never heard of them before. It's an Encore. Are they? They're a uranium
junior, I guess.
Okay.
I mean, is that sort of that lower tier below NextGen? They're not building out a mine yet. I'm not sure if Chris could actually write in a little bit and give some information on what stage Encore is at. That might help.
Without knowing the name, I would.
If you don't know the name, it's probably that's probably a sign. Is that what you're trying to get at?
I've never heard of the company, but I would imagine if I was a betting man, which is what I do for a living, I would bet that they're a newer entrance to one of the newer entrants, because there are some people who have figured out that we have a good shot here at a good uranium bull market, and they're stepping up. And the way I'm playing this bull market is it'll either happen or it won't. And if it doesn't happen, I have a good decent holding in NextGen, which will go into production. The cost of production is around $10 a pound. The spot price is $30. So the term price, let's say, might be $40 a pound. So they'll make pretty significant margins. So I'll make money whether or not there's a uranium bull or not. But where I could actually make a huge amount of money is if my thoughts on the uranium market and those of some other players that understand it are correct. And if we do get a good uranium bull market, it is truly amazing what can happen.
Yeah. Well, we got a question from Nick about one of the things that could drive that bull market. He wants to know whether the Chinese have uranium stockpiled for these reactors they're building. Do they have contracts set up? Do they have uranium in that they've already bought? How are they going to be able to power those reactors that you're talking about?
Yeah, no, it's a very good question. In the last uranium cycle, again, and that was, I was part of a shareholder of Extract Uranium. We sold a big Namibian uranium project to the Chinese, and so they put that into production. It may have been shut down now, but I think their cost of production is around $70 a pound. And a lot of that's the problem we've got right now with respect to Cameco and a lot of the producers. The reason they're shutting down capacity, and sometimes they'll say it's COVID related, but the reality is for a lot of these guys, their cost of production's way above the current spot price. It's $50 to $70. In the case of Husab, my recollection is it's around $70. I'm not sure if they've shut down production right now or not. So the Chinese have been trying to buy their own uranium. They've also taken a strategic interest in fission uranium, which in my books has some significant mining challenges. But $100 uranium, I think, goes a long way to fixing a lot of challenges. So they've tried to take equity positions in some of these miners, and I'm sure they'd love to buy a stake of NextGen. I'm not sure the Canadian government would allow that, but we'll see. Perhaps if they have a non-operating position, they may be allowed to participate with NextGen. But that's one way they're doing it. As far as uranium stockpiles, countries, and this is why it's very difficult to really understand the uranium market, because what happens is countries view it very strategically, their uranium stockpiles, so they keep it very confidential. So I'm sure the Chinese have stockpiled uranium. They also own interests in mines and own entire mines. So that's what they're doing. And I think they'll be looking to enter into some contracts with some up and coming with some miners like Cameco, Kazatomprom, and NextGen once NextGen gets into production. So they'll be playing. The Chinese are very wise. They'll be playing it all three ways, from their stockpiles, long-term contracts they sign, and from equity interest in uranium mines, and from uranium mines that they own 100% and operate. So that's where they'll be sourcing a lot of their uranium.
Yeah, well, last time we talked, you mentioned that one of your favorite things to have happen is a junior miner that you own gets taken out by a major. In this case, could the Chinese maybe going and buying some of these undeveloped projects sort of be the equivalent of that in the uranium market? And is that anything you're looking out for?
Yeah, well, the Chinese right now, they're kind of licking their wounds a little bit, because when we sold them extract in the last uranium cycle and they got into production, production costs now are quite high. So they're I think a tiny bit timid, and I don't think their investment in fission has turned out super well for them either yet. So at this stage, I think they probably want to see those things do a little bit better, and they'll wait until perhaps the price of the commodity goes up a bit higher. But where I see the Chinese possibly buying some companies would be the juniors that have resources like Global Uranium and GoviEx, who are in Africa. Africa seems to welcome Chinese investments in Chinese mining more so than North America would. And I know in Canada, there are concerns about the environmental and employment standards of a Chinese operated mine operating in a first world country like Canada. I think in time with Canadian partners, they could alleviate a lot of those concerns, but that is a concern. Whereas in Africa, they operate lots of mines in Africa, and I think the Africans are a little bit more relaxed about having Chinese operated mines in their borders.
Okay. So we talked about, the Chinese changing position on it. We touched on the U.S. a little bit, but we got a question from somebody who would like a little bit more on, your take on the Biden administration's view on nuclear energy, given their focus on, the greening of the economy.
Yeah, I have not done a ton of research on the Biden's view. The only thing I've done is I've obviously, like a lot of people watching this, are aware that they've been trying to extend the life of a number of the nuclear reactors. So I think it's like anything with the new Biden administration, things will become clearer over time. What I think I would like to see is them starting to be more receptive to some of if I were the Americans right now, and we're seeing it here in Canada, let's not worry about the current light water reactors. Let's focus on the next generation reactors, the Generation 4 reactors. They're way safer, and they're modular, which means you could reduce the capital cost of them. So they're cheaper, they're safer, and they can be smaller, and they can be stacked in series to create whatever size power plant you want. So to really understand that, I think you really need to see where the U.S. is with respect to backing that. And I've seen a lot of instances, certainly under the Trump administration, where they were very supportive of next generation reactors and the research and development along that. Obviously, Bill Gates is backing nuclear energy, although he uses, instead of a new material, he believes some of their technology can use some of the spent fuel as feedstock for the reactor. So let's see over the next few months in the administration how their view is on the next generation reactors, because that's, I believe, where the future is the Gen 4 reactors. What's interesting about China too, I think they just commissioned their first ever nuclear power plant using Chinese only technology.
Wow. Yeah.
Which they may have borrowed from the West, but
what does that mean? Well, I do want to change gears a little bit. It's been great to talk about uranium, but one of the other aspects of your portfolio right now is a bet still on electrification and still a bet on sort of the greening of the economy, but it's a little bit different play, and it's mostly sort of base metals, nickel, copper. You believe steel is going to be incredibly important. So why don't you talk to me first? Let's start out, with the top level view, and then we can get into each of the ways you can play it, and then specifically why you don't like some of the favorites of people who are betting on the same trend, cobalt and lithium.
Okay, well, my general view is there's two big trends here, and there's three big things investors need to know here about what's going on in the mining sector. And the first thing is mining stocks relative to any other financial instruments are at historic lows. You could see the charts, you could graph them anywhere. Like commodities are super duper cheap compared to, let's say, the S&P 500. And a lot of people are calling the bottom on that, basically saying they're just, the valuations are so ridiculously cheap to the S&P 500 that we're at the bottom of a commodity bull market. And Goldman Sachs just put a piece out. They were thinking that way, and of course that's the way I think too. I think we're in the beginning of a commodity bull market. Two driving factors behind that would be the big infrastructure projects. Like when we get out of this COVID, there isn't a country around the world that won't be deficit spending and putting some big capital projects to work. And so you have to look at, well, what metals are needed for those capital projects and where are they coming from? The next one also is, I think a lot of these big $1 trillion capital projects people will say, well, where are we going to spend our money? Do we need more bridges? And well, we got enough bridges. We could repair a few. That's about it. We've already built out our roads. What are we going to do? Well, we don't have a charging infrastructure for electrical vehicles. So we got to build out our charging infrastructure. And we need to build out our power infrastructure. And if we're going to be putting, a million or several million cars on the road that are electric, we're going to need to put some money towards our power grid to make it more reliable. So I think we're going to see the $1 trillion deficit spending for capital projects, and then we're going to see the electrification. The whole electrical system in our world needs to be upgraded in order to allow that to happen. So there'll be some exciting times here for metals because you need metals to do this. End of story. And metals are so cheap versus the S&P 500 and other sectors that it's pretty good time to think about it seriously, frankly.
Well, I know you like copper because it's the one that you say cannot be cut out. No matter which way this all goes, copper will be a part of both of those trends. So can you talk to me a little bit about why you think copper is the one that can't be replaced, and then maybe some companies that you think are best positioned?
Yeah, the reason I think copper, I'll just explain that a little bit, is when you're looking at electrification, you could break it down into two things. You look at, well, what does it take to build an electric car, and will that change, and electric infrastructure? Well, you cannot replace copper in terms of what's required to build an electric car. And copper, you require about 3 to 4 times as much copper to build an electric car versus an internal combustion car. And to build an electrical grid, copper is a very important part in it. In some instances, I'm sure they'll substitute it with aluminum or other things. But in general, copper will be needed there. Now, in terms of batteries, the problem I see with battery metals, and people, quote battery metals, when if you're short-term trading these battery metals, great, but long-term, here's my thoughts on battery metals. When you take a look at them, I don't think there's a single scientist in the world that is working on a battery and expecting to put the levels of cobalt in that battery that are currently in some of the batteries now. Everybody's trying to engineer out cobalt. Cobalt's reasonably expensive. The biggest risk to cobalt, there's only really one source of it in the world, which is the Democratic Republic of Congo. I've been there. I've done business there. I know the routine. Trust me, you don't want to base the entire electric revolution on the politics of mining cobalt in Congo. So I think it's very, very wise to be engineering out cobalt. It represents about 80% of the world's cobalt comes from there. Trust me, you'll want to engineer out cobalt or certainly minimize the impact cobalt has. So around the world, scientists are designing these next generation batteries, and they're trying to minimize cobalt. Another one they're trying to minimize too is nickel. And so they're trying their best to minimize it. And then there's other technologies, as you know, that are up in the air. I've heard, of batteries that are using iron ore, they're using zinc, they're using some other metals to replace some of the other ones, and some of them are even replacing lithium. So for me, as an investor that's not smart enough to predict the future as to what metals we're actually going to need for the next generation batteries, I think the safest bet there is copper. Copper is where it's at. It cannot be substituted, and it's used to build the infrastructure in the cars, and is used in the batteries. But battery technology is going to change a lot over the next in the coming decades. So to go out there and spend 6 years building a new cobalt mine or whatever else, expecting it to be used in batteries, I think is a risky proposition. So that's
okay. Now, what about nickel? Maybe I misunderstood you, but I thought you were bullish on nickel. It sounds like you're saying they're trying to engineer it out.
Yeah, they are. They are trying to engineer out nickel. They're trying to reduce it. I am bullish on it because it's a tricky commodity to find, especially the higher grade the better deposits, which are nickel sulfide deposits. I've been looking the most of my career for nickel deposits. They're tough to find, and nickel sulfides are the creme de la creme. So they are. They're going to, nickel will be used for other purposes other than batteries. And I'm positive on nickel. Anytime there's a good nickel project, I seriously will look at it very, very hard. But they're very, very rare. And the good thing about nickel is you'll find nickel in Indonesia, you'll find it in Canada, you'll find it in Russia. So it's much more diversified than Congo. And of the battery metals to be engineered out, it would not be the number one priority of engineers to engineer it out. Cobalt is the number one priority, I think, to engineer out of batteries. And nickel, they'll just more so do it just on the cost side. So if nickel runs too high, they'll just try and engineer out as much nickel as they can, or use as little as they can. But I'm always on the lookout for a good nickel project. They're so rare. Okay,
we got a question about one NILSY. Is that a nickel project that you are looking at all?
Again, I have not heard of. I have no idea what that symbol stands for, and that's too many letters for the Canadian exchange. NILSY. I must admit, I'm not familiar with it either. If you are going to, I'll say this to the viewers: if you are going to ask about a name, please give the ticker and the name of the company. I wish I knew every ticker in the world, but unfortunately I do not. But in our pre-call, this might help give a little bit of a picture. You said that there really are not a lot of good nickel projects out there, and that you should be cautious of just buying a company because it's got nickel in the name, and that is sort of a thing that people do because there aren't that many projects. Yes. Yeah. I took a bit of flack on Twitter for beating up on a nickel project the other day. So they're very tricky to find. And for myself personally, right now, I only have until recently I had 0 nickel investments, and I haven't had any for at least 10 years. That gives you a level of difficulty for me to find a good nickel project. good nickel projects right now, there's a number in Canada, but they used to be owned by Inco, International Nickel Company, but they got bought out by Vale, the big Brazilian mining company. So that's a bit of a problem. And there used to be, obviously, Falconbridge used to be a big player, so they're now in a big conglomerate. So a lot of the really awesome nickel projects are stuck in with these majors, and they're holding on to them firmly and not letting go. But so you really have to be cognizant. And with nickel, there's a lot of real intricacies with respect to metallurgy and smelting and logistics that a lot of people that are neophytes to the business aren't that familiar with. But just recently, I am reviewing one nickel project that I have a small investment in, which I think could be interesting, but it would be an early stage one. But they're very tricky to find, and unfortunately, right now, I do not know of a single public one that I would put money in at the present time. Okay.
All right, we did get a name of the company. It sounds like we already have our answer on it. But Norsilk Nickel is the NILSY. And then people also asked about FPX Nickel and Canada Nickel.
Yeah. Canada Nickel was the one I wasn't a super big fan of. It has a project just north of an old hometown I spent 4 years living in. I used to live in Timmins, and it's just north of Timmins. Timmins is probably Canada's biggest gold camp. Yeah, I think it is. Yeah. So it is. I grew up 4 years as a kid in Canada's biggest gold camp, and I toured mining properties when I was 1969. So like my neighbor worked in a mine. I got a mine tour when I was like 5 years old. So I've been around mining for a while. The problem with that one, of course, is you just look at the grades and you just go, okay, the grade's 0.3 and the recovery ratio's 50%. Then you go 0.15% nickel, and you go, well, 0.15%. Well, then that's for every percentage point that's for a metric ton, that's 22 pounds. You work out 22 pounds, multiply it by the nickel price, and said, okay, can you mine it for that price after you've taken the overburden, after you've dealt with the pit wall design, after you've dealt with the stripping ratios, and then you're dealing also with a unique nickel in a unique matrix geologically, which is perhaps not as optimal as finding nickel in let's say a Pentland Lake form, but so it gets pretty tricky on the metallurgy front. So if you've got what I consider very, very low grade, and you've got reasonably tricky issues with respect to metallurgy, and then, let's say you get through all those hurdles, and then the smelters are not very nice people, and they totally take advantage of you when you take your ore and you take it to a smelter and say, can you give me the metal back out of that? And they say, we're not going to give you all the metal back. We're going to keep a bunch ourselves. So that's the issue. So when I look at a nickel sulfide, and this is why I'm not a fan of Canada Nickel, when I look at one, I want multiple percentages of nickel rather than 0.3 nickel. And I would want better recoveries than 0.5. So when you start working at that, it's not for me. In $30 nickel environment, if nickel was to go to $30, like many multiples is the spot price, and I think the spot price around $7 or $8 now. But pigs fly in the $30 nickel environment, I guess. So people buying that are thinking, with all this demand for nickel for electric vehicles, well, we're going to buy Canada Nickel because it's obvious to everybody the price is going to the moon, and I'd rather buy nickel companies that today would make a ton of money and are extraordinary at today's price levels, just in case that doesn't happen.
Okay. Well, there was one resource that we haven't touched on yet that you mentioned is one that you're particularly bullish on, which is metallurgical coal. So that's more for the big infrastructure projects you're talking about. It's needed to make steel. What are you looking at there? And I guess for people who don't know the difference between all the different types of coal out there, could we start there?
Yeah, the biggest difference is when you look at the coal from highest quality to lowest quality, when you I guess the environmental greenies are talking about the bad coal. The bad coal is the stuff that's just, you pull it out of the ground and you burn it and you generate power. That's generally what the low quality coal is used for, and that's called thermal coal. Now the high quality coal, which is there's a number of different factors to consider it high quality. That high quality coal is used in the making of steel, and it's called metallurgical coal. So I'm not positive on thermal coal, but I'm positive on met coal. The reason I'm not positive on thermal coal is around the world they're trying to phase out coal, okay, and in burning, which is the right thing to do, right? We don't want to be burning coal to generate electrical power to power our vehicles that we think are green that are actually really coal powered. So you got to remove coal from the grid, or the whole electrical revolution doesn't really matter. So for the next number of years, we're going to need a lot of steel for these infrastructure programs. And going into steel, we're going to need iron ore. You're going to need metallurgical coal that provides the carbon for the steel. And then, of course, there's a couple tweaks with respect to different types of steel, whether you need a little bit of molybdenum or whether you need a little bit of nickel or you need some other small amounts of metals. But met coal is needed for steel. And I'm involved in a really nice met coal project in northern Canada. And so I'm pretty optimistic on that. And the best part of the situation is it's the only met coal company publicly traded I know of in Canada. And so nobody understands it. So it's trading super duper cheap. And it has tremendous upside because of that, because nobody understands coal. A lot of people don't understand the difference between thermal and met coal. And with only one coal company out there that's met coal, nobody understands it. There's no multiples to compare it to. So it's trading at, last I looked, it's trading at 15 cents per ton in the ground, which is super cheap given, met coal is, depending on the quality and where it is, between north of 160 a pound per ton to 200 a ton. So if you're buying something in the ground in Canada in a great mining jurisdiction as part of a huge deposit that's quite economic, and you're paying 15 cents in the ground, and you can sell it for $200 once you yank it out of the ground, put it through a wash plant, and get it out to the ships. There's quite a bit of margin in there. So I'm betting that it's not worth 15 cents, but it's not worth 200 in the ground. So comparable transactions have taken place in the $3+ range in the ground, which is, I believe, prudent. So we'll see if it can move from 15 cents to the $3. There's a fair amount of leeway in there. And if we only get $1.50 or $2, again, that's a 10 bagger there. So that's why I'm excited about that particular name.
All right. Well, you said it's the only one that's publicly traded. Can you give us the ticker, or are you going to make everybody go home and do some digging?
Okay. Well, no, it's an easy one. It's called Colonial Coal, symbol CAD. And it's basically a very simple situation here where the deposits have already been drilled out. Everybody knows where they are. All the technical studies are available. It's just a matter now that who it gets sold to and for what price. So if you're into sitting around and waiting for that to happen, it's a good investment. But I'll tell you, sitting around and waiting for big companies to buy you out, it's fantastic when they happen, but man, you need patience. And I've had this stock for a number of years, and little by little, we're grinding it out. And I'm sure they're making progress little by little towards eventually getting this company sold. So fingers crossed. Yeah.
Yeah. Well, I want to switch gears here over to precious metals. There's been a lot of focus. Obviously, gold kind of broke down a little bit this week, touched into the 1700s for the first time in a while. And then as well, there was all of this, what I believe to be nonsense about, a silver squeeze going higher. So I would just like to first start out with talking about, where do you think we are in the precious metal cycle? And when you're thinking about different precious metals, why do you go with gold versus silver?
Okay, well, first of all, I like gold way better than silver. I have bars of silver and I have bars of gold, and the bars of silver, they all tarnish up, and for per value, they take up so much more storage space than the gold. So I don't like the tarnishing of silver. It's just not ideal. I remember going to the Bank of Nova Scotia's vault. I had a friend who organized a tour for me, which is very, very kind, in Toronto at the big vaults there. And you walk in and you see these skids and skids and skids of silver, these big silver bars. They're all tarnished. And I walked in, okay, well, where's the gold? And they take me to one cabinet. They just open the cabinet. No, here's all the gold. And the amount of value in that little cabinet. So the store of wealth per square foot and cubic foot is quite robust, and you just see it sparkling gold, just like the day it was mined, versus the old tarnished old silver. That's sort of my view on why I'd rather have gold than silver. Silver, the other issue too is it is a byproduct metal to a certain extent, and so that means basically when other commodities are being mined, they'll get silver in their concentrate. And so that silver will be mined regardless of the price of silver. The silver, like let's say you're a platinum palladium mine or a lead mine with some silver in it. Well, it doesn't matter what the price of silver is, it matters what the price of lead is. And the price of lead is economic. That silver is going to be produced, whether the silver is $5 an ounce or $25 an ounce. So you have this byproduct hitting the market. So I haven't been a fan of silver there. The other one is there's not a company that I consider the creme de la creme silver company with the creme de la creme massive silver deposits. Generally, silver deposits, when they're only silver, are generally smaller, and they're throughout Mexico. Mexico I don't particularly like as a country to mine in, or they're in let's say the northern U.S., like around Coeur d'Alene or wherever. But so they're generally smaller mines if they're silver only, and then you're also dealing with the byproduct issues. Whereas gold, you're looking at, well, you could buy big companies like Newmont and Barrick has massive gold projects in Nevada. There's some massive mines in Nevada that only produce gold, and they're amazing. And that's another reason for it. And so when I take a look at, let's say, you asked sort of you probably want my view on gold here. Well, a lot of people got behind gold and they ran it. Well, first of all, I'm a bull on gold long term. I believe eventually all this money printing will impact things, and the price of everything that we all buy every single day is going up and up and up, and gold is a tremendous hedge against that. And you just buy it and you park it away in a safety deposit box, and you're good to go, right? Now, the issue with this most recent run in gold is a couplefold. What people sometimes forget is that, well, before the speculators jump into gold, and they weren't there for a good long period of time, the gold market gets along fine without these speculators. And who buys the gold? Well, the gold is often bought by central banks, or let's say the big buyer is also, let's say, the typical Indian consumer who buys it for a store of wealth and for weddings. And so the Indians from India are a big buyer of gold. Well, you take gold from $1,200, $1,300, $1,400, and you run it up to $1,900 an ounce in the midst of a pandemic by a bunch of speculators out of the U.S. or globally. If I was an Indian consumer, I say, well, hey, you guys ran this up pretty good. I'm going to back off my consumption of gold. So that's what's happening now. Is the primary demand for gold is being destroyed because a lot of the typical consumers are dealing with sticker shock, and they're saying, well, listen, I could postpone my purchase of gold. I've seen this before. It'll come off, and I'll buy it at a later date. So anybody who could postpone their gold purchases are doing that, and then. The central banks are, pretty much doing the same things. We're fighting fires all around the world in our economy with COVID. Where in the priority list is buying gold for our central bank right now, especially after many hundreds of dollar run? So primary demand has been hurt, and then you've got speculative money going in. Well, speculative money is all well and good until speculative money gets bored and goes, it's like little dog saying squirrel, and they're off to somewhere else. So they're dumping their gold, they're moving somewhere else. So I think we're kind of in that consolidation phase now. I'm bullish on gold long term, but it's ran pretty hard, pretty fast. The market has to get used to these new prices, and without the speculators driving it. And I think the speculators are moving on to something else. And so we'll see where they go next. So hope that gives you a flavor for kind of where I'm at.
No, that's great. And actually, we got two questions, one from Christian and one from Vladimir, who both want to hear about Soul Gold.
Oh, thank you. Yeah. Again, people who follow me on Twitter, I haven't necessarily been super kind towards the CEO of SolGold, and I've been calling for his replacement for a little over a year. And that was announced here fairly recently. I guess some of the other shareholders agreed with me that he needed to be replaced. And he's in the process of doing that. Throughout the past year and a half, maybe in fact possibly 3 years, in my conversations with the CEO of SolGold, he and I have locked horns and disagreed in quite a number of things. And I believe the strategy he was following was quite flawed in quite a number of things. And so I've had large disagreements with him. And so I guess the board and other shareholders started to share my view on that, and he was replaced, and he'll be, I think, replaced by the end of March. And I think possibly the reason these people are asking me about it today is SolGold has just today announced that they're going to be delaying their pre-feasibility study and possibly re-engineering it. That's, of course, another problem I had with SolGold is, not only the, anyways, well, I've had a problem with a number of things they've done, and their pre-feasibility study, they've been delaying it forever, and now they come out to say that it's going to be delayed for another 12 months pretty much. So it's not something I would have done. So Nick is still in charge until the end of March, and they're still doing things that I wouldn't necessarily agree with. So I'm hoping at some point the board of SolGold will start doing the right things. They're starting to do some things that are correct, but there are some obvious moves that I think they should be doing that would create value for everyone who's involved in the situation. And the situation is very unique in that, for instance, if you look globally, of the top 40 drill holes ever drilled into a copper porphyry, SolGold has drilled 17 of them. Some of the drill holes are 1.5 kilometers long, 0.93% copper. 1.5 kilometers long copper intersections in this deposit. This deposit is world-class. We have investors like BHP, largest mining company in the world, Newcrest, largest gold mining company in Australia, Franco-Nevada, the largest and most respected royalty company, just recently put a royalty on this project. The project is good. The way it is being managed, I cannot say that I agree with. So I please hope the board of directors will start, working with some people who have some ideas that we think will actually work to add value for all shareholders. And so let's hope we have good things coming, because the other good thing about it is not only do we have tremendous stakeholders in this project, we also have we're also in the early stages of what I believe will be a tremendous copper bull market. So a lot of good things are happening. They've had some missteps. It's not that I couldn't foresee what they were misstepping on, but when you watch somebody walking towards and stepping on a landmine, you try and warn them. But if they don't want to be warned and they don't want to listen to you, so anyways, let's hope for better cooperation and better decisions made out of SolGold going forward to maximize value for all SolGold shareholders.
Okay. Well, so you talked about a project that you didn't like and you wouldn't touch. This is a project that you like, but you don't exactly like how they're running it. How, talk to me about that dynamic. And when you give up on a project, you're like, they're never going to get this one right. They've got the greatest piece of dirt I've ever seen, great results, but my God, they are never going to make this thing an economical mine. How do you go about that?
Oh man, it's been the bane of my existence, Max. I've been doing this just at Rosseau for 22 years, and I've been in the business 35. So the number of times, Max, I have seen a tremendous discovery mismanaged to the detriment of all shareholders, it pains me. That's why I was so vocal about what I believe SolGold was doing. But management is very, very key. Now, the problem we've got here is no different than any other industry in that, you see it in technology, right? You've got technology guys, the guys who start the technology companies, and they're the entrepreneurs or the go-getters, but then they just can't manage it at all. And they blow up the company. We saw it with Steve Jobs in his early years, right? Steve Jobs, tremendous entrepreneur, but he just couldn't handle the management of things. Then he went back and he eventually came back to Apple later on with some of those skills and made a great company of it. Well, the same thing is in the mining business. For instance, with SolGold, Nick Mather, he took a discovery that was initially, there were some sniffs of a discovery made by Cornerstone. He took it, made a big discovery. Okay, but then you start saying, well, I'm good at making a discovery of a tremendous asset. I've got BHP and Newcrest backing me. I'm going to take this forward. And then you start thinking you know everything about everything, and then you start making mistakes. So management is a bit of a problem. But my experience with these, in the end, a good deposit with the right shareholders, which SolGold has, and the right stakeholders, all working towards the same goal, will eventually get these problems sorted out. But we run into the same issues you run into in technology companies or whatever, where the entrepreneur wants to take it to the end, but may not have the skill set or judgment to do that. So we're getting that transition there, and we're moving on with SolGold, hopefully, and they'll start making some better decisions going forward.
Okay. All right. Well, I want to kind of close things out with we've got a lot of great questions from the audience. I'm going to try and get through as many as we can, but let's try and make it like a lightning round here. See how many we can get through. If you can't comment on the company, you don't have a view, that's fine. But we'll see how many we can get through. So Patrick wants to know if you have any comments on rare earths.
Okay, rare earths. Yeah, people say rare earths in China, we're concerned. National security, especially Americans, are freaked out. There's no rare earths in the world, and China controls all the rare earths. Don't worry, folks. There's rare earths all around the world. No worries there. We don't have to worry about China for rare earths. Why are they coming out of China now? Is because in China, they do not care about the environment as much as we do in first world countries. So if we in Canada took one rare earth and we had to compare a rare earth mine in China versus Canada, our costs will be much, much higher. So we cannot compete with China. Hence, China has the entire market. So the buyers, what are they after? The buyers are always after the lowest price of the commodity. So until they say, listen, we want to look at the entire environmental impact of this particular rare earth, and we're willing to pay triple the current spot price to have it manufactured or to have it mined and processed in Canada or any other first world country around the world. Until that happens, we're going to be relying on China for a lot of these rare earths. So that's sort of my quick and dirty on that. There are rare earths around the world. Trust me, all the rare earths aren't stuck in the ground under China. They're elsewhere too.
Okay. All right. So we got some questions to go back to copper. A question, what about FCX? And are there any copper projects that you would recommend right now?
Symbol SCX is
FCX.
Oh, Freeport.
Yeah.
I'm not a big company guy in terms of following Freeport closely. Freeport, for the big investors, it's a tremendous company to invest in. Obviously, there's some political risk with their projects in Indonesia. I've spent decades invested in Indonesia, going back to the BRIEX days. So, but they have projects around the world. They're for the big players. If you want some exposure to copper, it's definitely one of the copper names I'd be owning.
Okay. Any other of the smaller projects that you usually focus on that you're looking at right now?
Well, right now I'm pretty active in the Cascabel discovery in Ecuador. Again, we talked about many of the challenges we're facing with that. Additional copper projects. I like to be pretty focused on my names, but I can't think of one right now that I'm looking at for my next generation, as in to replace it with once we get SolGold sold.
So SolGold is kind of your copper play as well at the moment.
Yes, it is. Yeah, it is. And I can't think of right now another junior copper I've got right now that I'm excited about. But I must admit, I do have I do have a nickel sulfide nickel deposit that's probably going to be taking up most of my time going forward. But I'm not sure where I will be after SolGold gets bought out by whoever wants to buy it out. And I'm not sure where I'm going to recycle that money yet. But, but between now and then, hopefully I'll get some interesting new copper projects on my plate that I'll take a look at. But right now, I don't have one off the top of my head, sorry.
Okay. And then 2 questions going back to coal. Nick asked, did Colonial Coal get spun out of Canadian Pacific?
No, my recollection is Canadian Pacific spun out Fording Coal, and then Fording Coal was bought by Teck Caminco. So the former CP assets is my recollection. Again, this is happened like 20 years ago. So those assets out of CP, I believe they were Fording, and then they were bought by Teck. They're all in Teck right now. Interestingly, though, good question, because you look at where Colonial Coal's 2 projects are. Their flatbed project is stuck in between 2 Teck properties. It's right there. We're right in the middle of 2 Teck properties. And our Huguenot property is south of that by 80 kilometers, is stuck between 2 Anglo-American met coal projects. So they're in a good neighborhood, but yeah.
No, well, that's perfect, because Brigitte asked about Teck, as that was the next coal question was, what do you think about Teck and some of their projects?
Oh, okay. Well, Teck, it's a big name. I don't follow Teck too often. All I know is on Teck, very fascinating company. If you look at the share price of Teck, if you could call Teck share price, you can make a career of it. The number of times I've seen Teck go from $40 down to $4, back up to $30, down to $8, back up to $20. It is truly an incredible stock to trade. It has lots of liquidity. You can make a fortune on that. Going forward, where I see happening with Teck is, Teck's a big company, so they're stuck with a lot of these ESG things, right? So what they're going to have to do, and this is just my opinion, right? Like, they want to be politically correct, and unfortunately, a lot of the people that are forcing political correctness on the mining industry don't understand the mining industry. So they're going to put pressure on Teck, saying, "Oh, you're involved in coal. We don't invest in Teck because you own coal assets." And then Teck has to explain, "Well, we're not involved in thermal coal assets. We're in met coal assets that need to make steel, and we need steel to make those Teslas that you guys are driving." But I wouldn't be surprised if I see Teck spin off their coal assets just to say, "Okay, guys, we're going to give up on explaining the difference between met coal and thermal coal to you. We're going to spin it off to a new coal company and just do the reverse of the Fording Coal acquisition." Also, they have a small stake in I believe it's called Fort Hills, up in northern Alberta, in an oil sands deposit, which I think they'll probably, to be politically correct, they'll probably spin that off too at some point too, when the oil market's perhaps a bit more robust. So again, Teck is probably has a few more handcuffs on them than I would have as doing what I do. And they're going to be under some pressure, I think, to sell their coal assets or to spin them off, even though they're not thermal. Yeah, it's the way of the world with this ESG thing. It's crazy.
Okay. All right. Everybody wants to know about individual names. We're not going to be able to ask every single one, so I'm sorry if we don't get to your specific company, guys. Gary asked about the Canada-BC Golden Triangle development plays, so Skeena Resources, Ascot Resources. Do you have any insight there?
Yeah, I'm not active in that area. It's just actually right now I'm not that far away. I'm in British Columbia right now in the mountains, and they're northwest of me. I'm not active in those right now. In the last 22 years, we have been 40% of our profits in the last 22 years have been from gold juniors. And we look on a global basis for them. And generally, I look for really extraordinary gold deposits. And that's taken me around the world. South America, I was involved in a lot of big discoveries in South America, in Quebec, I'm also, my biggest interest right now is in Nevada. We're looking at a large scale situation there. And the ones up in the Golden Triangle are generally a little different, and they're trickier to value. They're high grade gold in quartz veins, which is super duper tricky to model. And it's tricky to know really what kind of gold you've got there. So I tend to stay away from that a little bit. And my previous gold wins have generally not been related to that. But, sorry, I'm just not active in that region.
No, that's okay. Down in South America, we got two people asking about Salazar resources in Ecuador.
Salazar. Yeah, my recollection, I'm not an expert on Salazar, but that would be, my recollection is correct. That would be a copper project in the southeastern part of Ecuador, if I'm not mistaken. I Google it and I know 2 seconds, but yeah, I'm not following Salazar, and if it is a company, I think it is. I took a look at it, and I know the people behind it, and I knew if it is the company I'm thinking of. I looked at the valuation, and the valuation was very, yeah. It's my house alarm going off. So that was my. I'm active, and part of the reason you might ask me, Warren, why aren't you active in this name? I believe I looked at it. It was expensive from my point of view. It didn't surprise me given the people involved in it. Also, with respect to sovereign risk, I've been involved in Ecuador quite a number of times. I was one of the biggest shareholders in the big discovery of Fruta del Norte, which is currently being mined by Lundin Gold. I have enough Ecuadorian exposure through my exposure to the Cascabel discovery there. So when I have that level of exposure, I don't spend too much time looking at additional projects in the country because there is sovereign risk there. The Ecuadorian elections are happening here, and you just have to be cognizant that these South American countries, they'll be pro-mining one minute and anti-mining the next. So that's sort of why I don't follow it. Sorry.
Okay. All right. Well, I think I'm going to have to cut it off here. Is there maybe one closing thought you'd like to leave the audience with?
Well, I would have to agree with Goldman Sachs that I really do smell a commodity market starting here. So it's probably not the worst place to have some exposure. And in some of the entrants, and if you're looking for the highest octane exposure in the commodity sector, I would say playing a good quality uranium name wouldn't be the worst place. I think gold is taking a breather for a while, and but I think longer term, copper should gradually move higher as more and more people start buying electrical vehicles and getting electrical infrastructure built. So I think in general, the outlook for commodities is pretty decent. It's not a bad place to be, and I think if you're not active there, maybe you should sell your Tesla, that stock that went up 7 times or 8 times last year, and think about getting back into a sector that's reasonably cheap, that would do very, very well if you believe in the success that Tesla will have in order to justify their share price.
Wonderful. All right. Well, Warren, thank you so much. It's a pleasure. Thank you to the audience. We got a lot of great questions. It's clear that we have people focused on the mining sector here at Real Vision. So I'm sure we will have you back sometime soon, Warren.
All right. Well, thanks for your time, Max. Have a great day. Cheers.
Yep. You too.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.